Hello everyone. Welcome to the Eagle Investing Theory. The core idea here is inspired by the eagle's qualities: flying high with a broad vision, staying sharp with focused attention, building resilience to overcome challenges, and ultimately creating a lasting legacy. These four pillars, vision, focus, resilience, and legacy, are essential for long-term investment success. My name is Shivaputra MC, and as an AMFI-registered mutual fund distributor, I'm here to guide you in applying these principles to build a strong and enduring financial future. When we think about eagles, we're really looking at a powerful metaphor for wise investing. Like eagles, successful investors share key qualities: a clear vision, sharp focus, resilience through tough times, continuous renewal, and independent thinking. First, eagles have incredible vision. They soar high and see far ahead. Similarly, smart investors focus on a long-term horizon, keeping their eyes on the next 10 to 20 years rather than getting distracted by daily market noise. Next, focus is critical. Eagles strike with precision when the moment is right. Investors should act only when they have clarity and spot real opportunity. Then there's storm power. Eagles endure harsh weather, and investors must stay committed through market crashes and crises without panic. Renewal is just as essential. Eagles periodically adjust their strategies to stay strong, and investors should review and adapt their plans regularly to stay on track. Finally, flying alone symbolizes independent thinking. Just as eagles avoid the flock, wise investors resist herd mentality and make decisions based on their own analysis, not following the crowd blindly. Together, these qualities form a blueprint for building long-term wealth. Let's talk about two key traits of the eagle that offer valuable lessons for investors: vision and focus. First, vision. Eagles have incredible eyesight and can spot prey from up to 3 miles away. They don't just concentrate on what's right in front of them. Instead, they see the bigger picture and anticipate what's coming long before it arrives. For investors, this means thinking long-term. Warren Buffett reminds us that the stock market transfers money from those who act impulsively to those who are patient. So, instead of focusing on short-term fluctuations, we should look at where our investments are headed 10 to 20 years from now. Next is focus. An eagle doesn't chase every opportunity. It waits patiently and then strikes with precise timing. This selective approach prevents wasted energy and effort. Similarly, successful investors like Rakesh Jhunjhunwala didn't spread their bets across countless stocks. He concentrated his investments, placed big bets where he saw potential, and stayed patient. The lesson here is clear. Every rupee invested without clear intent is essentially wasted. So focus your resources carefully and wait for the right moment to act. Eagles have two remarkable traits that offer us powerful lessons in investing: storm power and renewal. Eagles are unique in that they fly above storm clouds, harnessing the wind's pressure to lift themselves even higher during turbulent weather. This teaches us that markets, much like weather, will always have storms, whether it's the COVID crash, the 2008 financial crisis, or spikes in inflation. The key for investors is to stay the course through panic and volatility, because those who do often come out wealthier in the long run. Remember, volatility itself isn't the enemy. Our emotional reactions to it are. The second important trait is renewal. At around 40 years old, an eagle must endure a painful process of breaking its beak and pulling out its talons to effectively renew itself and live for another 30 years. This bold transformation is a metaphor for our own financial journeys. We need to regularly review our goals, upgrade our strategies, and be willing to cut out bad habits, adapting to new economic realities. The takeaway here is to review your portfolio annually, embrace change and adaptation, or risk stagnation. This proactive approach ensures longevity and sustained success in your financial life. When it comes to investing, it's crucial to fly alone and think like an investor. Avoid the flock mentality. Just like eagles, you need to soar above the noise and not follow the crowd blindly. Eagles don't fly with pigeons. They either fly solo or with other eagles, maintaining a perspective that keeps them high and focused. Charlie Munger wisely pointed out that intelligence alone isn't enough. Many smart people fail at investing because they lack the right temperament. During bull markets, most people rush in like herds, driven by excitement and fear of missing out. But true investors, like eagles, act based on their own thorough research. The key is to stick to what's right for your specific plan, rather than chasing trends. Now, thinking like an investor means you're not speculating. Think of investing as planting trees. you're nurturing something that grows over time, not just plucking fruits every day. Having a system is essential, whether it's through systematic investment plans, diversified mutual funds, or long-term equity investments. Remember, time is your greatest asset because it allows compounding to work its magic. Risk doesn't come from the market itself, but from your own behavior. Managing your emotions and staying disciplined are what will protect your investments. And finally, think generationally. Aim to build wealth that lasts for decades, providing financial security not just for yourself but for your family as well. When it comes to investing, the difference between building wealth and losing it often comes down to mindset rather than math. Let me explain using two contrasting mentalities, the pigeon mindset and the eagle mindset. The pigeon mindset is reactive and emotional. Pigeons chase after every hot trend or tip without a solid plan. They panic and sell as soon as there's a 10% dip in the market, which means they end up missing the recovery that often follows. Their focus is on quick gains rather than sustainable growth. In fact, about 70% of retail investors with this mindset exit the market within just 3 years, often locking in losses. On the other hand, the eagle mindset is much steadier and long-term focused. Eagles stay calm and maintain their focus on the big picture, ignoring the daily noise. They make decisions based on thorough research and conviction, not on fleeting emotions. Just like an eagle flies above storms, these investors stay invested even during market crashes. They think in decades rather than days, understanding that compounding rewards are only realized when you stay invested long enough. As Warren Buffett famously said, the stock market is designed to transfer money from the active to the patient. So adopting the eagle mindset is key to successful, lasting wealth creation. Let's dive into some numbers that every eagle investor should know. First, consider the value of a monthly SIP of 10,000 Indian rupees over 25 years, assuming a 12 to 13% CAGR. That can grow to about 3.5 Indian rupees to 4 crore. Compare that to a lump sum of 1.5 Indian rupees crore invested, and you can see the power of consistent investing over time. Next, think about the Sensex. 1 Indian rupee invested in 1980 would be worth 600 times more today, not even counting dividends. This illustrates how powerful long-term equity investment can be. However, it's important to note that 70% of retail investors exit their equity funds within 3 years. This short-term mindset causes them to miss out on significant gains since equity markets generally need time to recover and grow. For example, after the 2008 crash, the Nifty 50 took about 3 years to bounce back before reaching new highs. This shows the importance of patience in equity investing. Historically, Indian equity mutual funds have delivered a compound annual growth rate of around 12 to 13% over periods exceeding 20 years. That level of consistent growth is impressive and reinforces the value of staying invested for the long haul. Finally, remember what Albert Einstein called the eighth wonder of the world, compounding. It's the magic that turns small, consistent investments into substantial wealth over time. Here's a summary of the Eagle investing mindset, which centers around 5 key traits that can guide us to better investment decisions. First, sharp vision means focusing on the long term, thinking 10 to 20 years ahead and tuning out daily market noise. Next is patience, where timing is crucial. Instead of reacting impulsively, we wait for clear opportunities and fair valuations. Then comes storm power, which encourages us to embrace market volatility by staying invested and continuing systematic investments even during downturns. Renewal reminds us to adapt by reviewing our portfolios annually and evolving our strategy based on what we learn. Finally, flying alone highlights the importance of independent thinking. Doing your own research and avoiding herd mentality helps make smarter decisions. Remember, compounding is often called the eighth wonder of the world, but it only works its magic if you stay invested long enough to see the benefits. Let's talk about the Eagle Investing Blueprint, a strategy designed to help you build wealth steadily and with confidence. First, we focus on SOAR, which means gain altitude by starting early. Even beginning with a modest amount, like 5,000 Indian rupees per month, through systematic investment plans or SIPs and diversified equity mutual funds, can set you on the right path. The key is to have a long-term horizon. Think 10 to 20 years from day one. Next is SCAN, which is about seeing far through thorough research and maintaining focus. Instead of just looking at prices, study the businesses behind the stocks. Quality matters more than quantity, so build a watch list and wait for the right fair value to invest. The third step, soar high, encourages you to rise above market noise and stay invested. Don't panic or exit during market downturns. In fact, continue or even increase your SIPs when markets are down. Remember, volatility is just the cost you pay for long-term gains. Finally, think about legacy. Investing is not just for you, but for generations to come. Review and rebalance your portfolio annually, get the right insurance, do estate planning, and make sure you pass on both wealth and wisdom to the next generation. This blueprint turns investing into a disciplined, visionary flight toward lasting financial freedom. Think like an eagle when it comes to investing. Fly high by setting ambitious but realistic financial goals. Always think clear, keeping a calm and focused mindset even during market fluctuations. Remember, building wealth is about establishing strong roots that will support you and your family for the long term, not chasing quick riches. Whether you're investing 5,000 or 50,000 rupees a month, the key principles don't change. Soar high, skin far ahead, stay calm in the face of challenges, and ultimately, build a legacy that outlives you. If you have any questions or want to discuss your financial goals, feel free to reach out to me anytime.